the interesting way of looking at it is how will this impact fiscal and monetary policy? So I think that by the autumn, most G7 countries will be in recession. The war will have intensified. Central banks will be very concerned, and led by the Fed, we will see the G7 central banks either by the autumn or in the fourth quarter completely turning policy upside down by turning the credit taps full on.
Simon Hunt, the founder of Simon Hunt Strategic Services, which provides strategic advice on the global economy, including geopolitics, China, and the copper industry, is predicting a significant period of economic decline for all G7 countries latest by early 2024. According to Simon, the member countries of the Intergovernmental Political Forum, Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States, are already showing signs of impending economic collapses. When the recession hits, the renowned macro analyst says the markets will experience a sharp decline, with U.S. stock market prices falling by 30 to 35%. It is at this point that all major central banks will be forced to reverse the strict monetary policies of the past year and introduce various quantitative easing measures to rescue their respective ailing economies. On the possibility of the United States hitting a recession despite Wall Street giants like Goldman Sachs and policymakers predicting otherwise, Simon says their predictions hold no water because they are based on false data. The renowned geopolitical analyst questions the strength of the economy, stating that many important factors are missing from the official jobs market metric to purposely keep the figures high and project strength for a rapidly weakening economy. After months of predicting a soft landing, Treasury Secretary Janet Yellen is not completely writing off a recession. During a recent interview with CBS, Yellen said a recession is not completely off the table, even as the U.S. economy remains strong. While commenting on the June jobs report, Yellen said the job market is still strong but cautioned Americans to expect a slower pace of ongoing job gains. She also explained that the lower-than-expected inflation figures show that the fight against inflation is yielding positive results. Simon's predictions for the U.S. economy are more dire. He is predicting both a moderate to severe recession marked by increased layoffs and a stock market crash, and a second inflation wave which he says will begin after central banks turn on the printers again to save their crashing economies. During a recent discussion with Kitco's Michelle McCory, Simon lays out his outlook for the United States and the global economy. He also suggests the best way for investors to make some quick money during the coming 12 to 18 months, both in the equities and commodities markets. We will now bring you clips from the discussion. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on the notifications bell, and drop your comments and observations in the comments section below. Thanks, and enjoy the video.
We will see the G7 central banks either by the autumn or in the fourth quarter completely turning policy upside down by turning the credit taps full on. Because by the autumn on our work, we will see most global equity markets falling by 30 to 35%. That's going to help produce this response by central banks. I think the evidence is very strong that the US will be in recession. It's being held up, the view has been held up by the employment data. But if you look at the two surveys, it's the establishment surveys that everybody focuses on. But the household survey possibly is more accurate. And that's actually telling you the opposite picture. The establishment survey suffers from two impediments. One, it does not include temporary workers, which have become an increasingly large part of the employment situation. And secondly, their own admission that the responses to their surveys have fallen. So how accurate is that survey? Whereas I say, if you look at the household survey, it's actually telling you that the employment figures actually got pretty weak. And then you have to look at the corporate response. Corporations first cut hours worked, which they have been doing. And it's only when you are physically in recession that they lay off workers. And I think that's what we will see over the summer months. It doesn't matter what the technical definition, the economy will be in recession. Negative GDP and all the inputs falling. And if you look at, for instance, people keep talking about Dr. Copper. Dr. Copper is the lead indicator. Well, if you talk to anybody selling physical copper in America, they'll tell you America is in recession. Physical demand is falling sharply. Yeah, don't forget there's a long lag between monetary tightening and its impact on households and businesses. And you can see, I mean, Germany is in a technical recession.
Okay.
And if you look at, I mean, all the information that I'm picking up is businesses slowing down pretty rapidly in Europe. So I can tell you that in China, despite what the government puts out, business is very disappointing. Order books, the second quarter, are pretty lousy. Big question marks about the second half of the year. The government's focus is much more on focusing on the country's debt issues, particularly local governments, than it is on stimulating the economy. So growth in China this year will disappoint.
After the recession eases with central banks' quantitative easing rounds, the next risk for the global economy will be a second wave of inflation that would ultimately lead to a more prolonged recession or even a depression. According to Simon Hunt, that would be the ultimate reset for the markets and the global economy between late 2024 and early 2025. But before that happens, Simon says a small window of opportunity will open for investors after the central bank printers come on again. With the Fed and other major central banks pumping money into the markets, asset prices will take off. At this point, the geopolitical analyst says it might be best to take some quick gains while observing what happens next. Here are more clips from the interview.
Equity sell-off, complete change in central bank policy. So you will then get, in 2024, you will get the second wave of inflation. And the second wave is always the damaging one, as Paul Volcker found out in the second half of the 70s and early 80s. And the dollar falls off sharply, inflation rises. So all the inflation hedges get bought, equity markets soar, commodity markets soar. And that, of course, leads to the big dangers from in 25 and 26, because what happens to long-term interest rates? It's the long end of the curve that central banks can't control. And I think there's a real risk that we'll see 10-year treasuries yielding well over 10%. What's that going to do to a very highly leveraged global system? 3% was bad enough. 10% plus, it is that which will lead us into either a very deep recession, or I think the risk of it being a depression is very high. And I don't think we get into to trend growth until the early 2030s. I suspect that certainly the leadership in China is fully aware of the frailty of the G7's financial system. And I think for the last 2 years, they've actually been planning for it.
What is an investor to do?
I think in the last hurrah, as I call it, gold price is going up and going up substantially over the next 3-5 years. Yeah, I mean, in the fourth quarter, you buy the market for a 12, 18-month view, but make sure you get out before the crash comes.
Simon Hunt is predicting that the war in Ukraine will escalate and coincide with the effects of central banks' ongoing tightening policies finally kicking in. Both events will slow down the global economy and force central banks to reverse their strict monetary policies. After a 30 to 35% drop in the U.S. stock markets, asset prices will begin to climb again, which will mean significant price gains for precious metals like gold, silver, and copper. What are your thoughts on Simon's predictions for the U.S. and global economy in the coming months? Let us know what you think in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.